Morning, guys. Great to have you. You do think that yesterday the notion of a recession got endorsed?
Well, we think the Fed endorsed it. There's no question about it. When you move your unemployment projections that high, when you drop to 3.5%, you have never escaped a recession. Fast upon. To be clear, Evercore ISI still thinks there is a ray of window. Ed Hyman believes we can escape a recession, but that window is closing very quickly.
With unemployment going to what, do you think?
Well, the Fed's projection is 4.4, but, clearly when you think about their rhetoric, all of the direction of where the error could be, it could be that it's higher than that.
This morning, Vincent, David Rubenstein of Carlisle said maybe that number's more like 6 by the time you get back to target.
If they really do want to get inflation down to 2%, it may very well be more like 6%. Look, we got 3 tells of recession. The Fed's never raised the policy rate this much without there being a recession. The unemployment rate, as in their forecast, has never gone up more than a half point without there being a recession. And Chair Powell said almost with a certainty that he thought there'd be a housing correction. Tell me how many housing corrections there have been without recession.
So when I hear you say that, Vincent, it sounds like you're saying that this is the closest we've ever seen a Fed chair get to actually forecasting a recession, even though he didn't do it explicitly.
Well, don't hold your breath to wait for an official to say there's going to be a recession. Like you'll never hear the IMF or the World Bank say there's a financial crisis. You don't want to be the official that was the one that generates the headlines that creates the event. They're always going to be lagging that, and that's completely understandable. He came pretty darn close. They have a forecast in which growth has been marked down a lot. The unemployment rate goes up a lot. And he was issuing a stern warning. I think to Steve's point earlier, the stern warning about the economy is the 2x4 hitting investors across the head. He did it at Jackson Hole. They did it as a group. There's going to be some pain because if you don't think the Fed can absorb the pain, you think they'll reverse policy too quickly and financial conditions won't tighten enough. They need tighter financial conditions.
So, Julian, it sounds like you're holding out a little bit of hope. But if a recession is increasingly likely here, I mean, just looking historically at recessions, earnings always come down in recessions. Do valuations of equities need to come down from here?
Well, they tend to both go down in a recession. But what I will say is and again, you talked about this on an earlier segment, the range of estimates is enormous. 190 on the low end, 255 on the high end, and at 221.5 unchanged year on year, we're actually smack in the middle. That's a sobering thought. But I will say this, the window is still open because we think the Fed may not sufficiently appreciate the fact that inflation is starting to moderate. And we think there's a good chance you're going to have a lot more data confirming inflation moderating between now and November 2nd.
Shepard Smith here. Thanks for watching CNBC on YouTube.